In Sunday's video, we took a look at the week ahead for Ethereum. Today, we will revisit the charts for a midweek review and take a look at our setups and triggers that took place, as well as looking at potential future setups and market direction. On Sunday, it was noted that the 4-hour was overbought and probably wouldn't have enough energy to get through the second blue band. The decision was to wait for a pullback and get involved on the second attempt to break both blue bands. The initial thought was to take targets in the upper purple bands that we have marked on the daily chart. Since price has been above the lower purple band on that chart, we will use that as major support to trade from. On the 15-minute chart, a red zone was created, and the pullback we were looking for ensued. The high of the move rejected at the bottom of the first blue zone. This was expected, and the reason to wait until the 4-hour stochastic RSI was reset. By Tuesday morning, the 4-hour reset, and a green zone was created. This provided a trigger to get long as well as tight risk control for a long trade. A post on X was sent out highlighting this new green zone. Not only was there a green zone, but also a point of control taken from the bottom of Friday's price on the 4-hour. This is also a large node from our other volume profile taken from the highs on October 7th. This indicated a good spot for support to take a trade. It didn't take long for price to shoot up through the first blue band and into the second blue band. There should have been plenty of energy to get through these blue bands and into the purple bands, as the stochastic RSI barely crossed over the 50% line. Instead of climbing higher, the middle of the blue bands was a strong resistance point, and the market quickly tumbled all the way back down. These bands are powerful areas of both support and resistance, as demonstrated here. Since that time, the green zone has been broken, and 2 red zones have been created. Break of these red zones can be used as triggers to get long, but by themselves are bearish. An X post was put out to potentially use the red zone as a trigger above $3,880. This trigger, however, never materialized. There were also back-to-back double bottoms or a triple bottom, signaling a potential bottom, another potential signal to take long positions. In the X post posed 2 possible scenarios, a break of the red zone higher or the double bottoms breaking for lower. The price target for the short of $3,670 was chosen due to the fact the 4-hour created a double top shown in yellow. A natural target for this double top would be at the 1.618 extension. Breaking that 4-hour trend line, this seemed like a good place to take targets if the market decided to dump. Back to the 15-minute candles. There is a bit of an odd channel shown in light blue where price seems to occasionally resonate at. So far, the market has decided that that's the current bottom and has broken through the other side of the channel again. Currently, looking to see if the red zone will break in order to once again get long. A break of the red zone would require a closing candle above the zone. No wicks here, we want to see actual candle closes above to show intent of the market going higher. Everything is still lined up for the market to go higher here in the short term as price is oversold, and price is still clinging onto the 4-hour trend line, but dumping is certainly not out of the question either. We want to be positioned for either scenario, but longs seem to make more sense if our most recent red zone breaks or we get a new green zone.